Hello students, welcome in today's video. Before discussing this video, let me resume with what I had discussed in the previous video. We were discussing the video on basic accounting terms, and let us continue in today's lecture with the same topic, accounting terms, which are further being discussed. There are many accounting terms, and these accounting terms can only help us to solve and apply the questions in a practical way. So one by one, these discussions will be very important to understand and remember. So let's come to this topic with the explanation of the terms, where the first term of accounting in this today's lecture is account. It is a place where the like or similar nature of items are recorded or maintained. It is prepared in a T shape. For your explanation, you will see I have prepared a format of an account in a T shape. This is a T shape. Here the heading will be recorded as name of the account, which account you are maintaining. Account is divided into two parts. Left hand side is debit, recorded as DR, ये रिकॉर्ड हुआ है. Right hand side is credit, recorded as CR. Now, with an example, we will understand how this account is being maintained and why. Suppose goods are sold. If I say a statement, goods are sold. So I need to maintain an account of sales, which will help me to understand that what is the total sale made in 1 year, and that sales from day 1 till the end of the year can be recorded in this name of the account as sales account, which I have taken as example. So now the second question can be raised in your mind, students. What is debit and what is credit? In a simple language, for a time being, just remember debit and credit is nothing but it is a certain increased effect or a certain decreased effect in accounting. How increase, how decrease, that we will try to understand in other classes. So debit is increase or decrease. Similarly, credit is increase or decrease. Any change, that is increase or decrease of any account, is being shown, which is help us to maintain the net effect in that respective account, is the process of account. Okay. The second term is purchase. The term is used for the purchase of goods in which business deals. Suppose I am a business dealer and I deal in furniture. That means my business is a furniture shop. So try to understand, if my business is furniture shop, what could be my items for that furniture business? It could be either purchase of furniture, it could be either purchase of raw material to prepare the furniture items, isn't it? So the term goods is the goods in which a business deals, and any item which we purchase in a business as goods is said as purchase for a business. This purchase can be made either in cash or on credit. I hope you all understand what is cash. When immediately the payment of the goods are being done, that is cash payment. And when the payment will be made in future for the goods purchased is credit, which is udhar. What it is? Udhar. Okay. Next term is goods. It includes purchase of those things which are for resale purpose. Any item as a manufacturer, if I am preparing, that will be sold in the market. So anything which is sold in the market is resale. Goods purchased and when it is being sold, that is said as resale. So any item which is resale in the market for the business is goods for a business. In the previous example, I have taken an example. In the previous statement purchase, I have taken an example of furniture store. So my goods for a furniture store will be either furniture item or any item which will help to produce goods as furniture is again goods for a business. Okay. The next fourth term is sales. It says as transfer of ownership of goods or services to a customer for a certain value or money. I am trying to relate this with again the example taken in purchase goods. Again, I am a furniture store, dealer in a furniture store, and I am now selling my furniture items. Students, if I am selling my furniture item, any item which I am selling, it is being sold for a certain price. So that price which I receive against that sale will be treated as sale for a business of that particular furniture item. That furniture item once again can be either in cash or on credit. If the payment is received immediately, that is cash received against sale. If payment is not received immediately but in future it will be received to us, that is credit, and again credit is udhar, goods sold on credit. Okay, chaliye, moving ahead. Debtors, very important term. Till now I would explain and try to understand, make you understand that purchase and sale, I hope everyone is clear. But this term debtors is what? Let us understand. Those persons to whom goods are sold on credit and the payment to be received in future. Now this debtor is relating to this term credit. In this previous statement I said na, goods sold on credit. So that statement will relate here. The person to whom goods are sold on credit. If I am a seller and I am selling goods on credit, means on udhar, and the money which I will receive against this payment, against this sale in future, from whom I will receive that money is termed as debtors for a business. Is it clear? The person from whom the business will receive the amount in future against credit is debtor, and the vice versa of this term is creditors. The person from whom goods have been purchased on credit and the payment will be made to them in future. If I am a seller, someone would be a purchaser, and that person who has purchased the goods is the creditor of a business. He is the creditor because he will make the payment to me. Then that person who will make the payment is creditor. Right? Or try to understand in a simple manner. I am a purchaser. I am a purchaser and I am purchasing goods on credit. That means in future I will be making the payment. So until and unless the payment is made by me to the person from whom I have purchased goods, I am a creditor to him. I will make the payment to him. Till and unless I am making a payment, I am a creditor for a business. It is my liability which I will pay to him in future. Okay. The next term is stock. The goods left unsold at the end of an accounting year. Is the word or the term goods clear to everyone? Anything meant for resale purpose. Until and unless those goods are sold in one accounting year, that is left as termed as stock. Left unsold. Stock can be categorized into two parts: opening stock and closing stock. Closing stock is the stock at the end of an accounting year. When that closing stock is taken forward in the next accounting year, that closing converts into the opening stock, because it is the stock at the beginning of the next year. When we take stock at the end of the year, it is closing stock, and when we convert this stock into the next accounting year, carry forward this stock, it is opening stock. Clear, students? This is all for the day. Do remember these terms, try to apply these terms, and along with the previous lecture on the accounting terms, with this lecture we will continue again in the next class as the terms of accounting which are still left. So, and try to relate each and every aspect again and again, and with my given notes try to read and learn them, which you can apply in your further studies. Okay.